In this video, we're gonna go over a simple EMA strategy that is so profitable it can even beat some overcomplicated SMC strategies. We're gonna combine these EMAs with another price action indicator to create this simple strategy. Well, let's get into it. So this is the 1 hour time frame of GBPJPY. Now, in order to build this setup, we need to click on the indicator search tab and then type in 7EMA_5MA. Then you need to select this indicator created by Storewise. Now, a moving average, if you didn't already know, is a common indicator used in technical analysis. The reason for calculating the average price of a trading security is to help smooth out the price data by creating a constantly updated average price. This indicator is designed to identify the trend direction of a trading security or to determine its support and resistance levels. Now, looking at this indicator, you can see that it's actually super messy. So let's access its settings, and then on the style tab, we're gonna disable all these EMA options except for the first 2 options. Then change EMA 1 color to orange. For EMA 2, we're gonna change it to green. Then on the input tab, you wanna change EMA 1 length to 20. EMA 2 should also be at 20. And then down here, you wanna change EMA 1 source to high. The EMA 2 source to low. After that, click OK. Now, there are multiple ways that you can use this indicator to trade. For example, you can place a trade every time the price action crosses and closes below or above any of these moving averages. However, this method of trading only works when the market is trending. As soon as the market starts ranging, you start getting a lot of trade entries, but almost all of them are not going to be successful. Another method of using this indicator to trade is to wait for the price action to pull back into any of these moving averages and then place an entry as soon as the market starts forming a strong candle. This method is a bit better, but again, it cannot be used in a ranging market. And I know this may lead you to wonder, so how can we use these EMAs to trade? Well, in order to use this indicator to trade, we need to add one more trading tool to the chart. Head over to the indicators tab and type in higher high, lower low strategy. And it's gonna be this one right here. You want to access its settings, and then on the style section, you're going to deselect everything except for the higher high, lower low option, and then click OK. We're going to be using this indicator to ensure that the price is headed in the right direction for us to take our positions. Okay, our setup is ready, and now let's understand the trading rules. So for a signal to go long, you need to have the following conditions met. Number 1, the price action must be above the moving averages. Condition number 2, the market needs to pull back into the lower moving average. For that, the candle must touch the moving average with its wick, but it shouldn't break and close under the moving average. Third, the moving averages must be pointing upwards like this. If they are flat or sideways like this setup is going to be invalidated. Lastly, the price needs to break and close above the most recent higher high level without breaking and closing under the lower EMA. We can see that this is the most recent higher high level, and then this was our pullback. So we basically need that from this pullback area to the break and close, none of these candles should close under this EMA. Simple. All our entry conditions are met on this candle, so we're gonna enter a long position here. We're gonna set our stop loss right at the most recent swing low, but if the swing low is too far down, well, we're gonna limit our stop loss to 0.3%. That number is gonna be indicated right here. The take profit is gonna be 1.5 times the risk. Letting the trade run and take profit. Now, notice when the market is moving sideways, the moving averages are usually flat. This is a super good indication that we should avoid taking positions. On the other hand, when the market is trending upwards, well, the EMAs are going to be pointing upwards like this. And these are areas where you should be looking to take long positions. Now, at this point in time, you may be thinking, but how do we take short positions? Well, I'm going to tell you. But before that, let's talk about the Forex broker called hankotrade. Now, I've been using hankotrade for quite some time. As you can see here, this is my live account on hankotrade's web trader platform. The reason why I think hankotrade is a great broker is because of their extremely low commissions and spreads. On Forex, for example, the spreads can go as low as 0.0 pips, which is actually the lowest spreads can go. For those of us who love high leverage, well, hankotrade offers a maximum leverage of 1 to 500. And if all of this isn't enough, they're also going to give you a 100% deposit bonus for all your first deposits of between $100 all the way to $25,000. So if you deposit, say, $3,484.50, well, they're going to give you a bonus of $3,484.50, giving you a total of $6,969 to trade with. To access the bonus as well as all the other perks, well, sign up to hankotrade using the link in the video description. Now, back to the video. Now, for short positions, the rules are going to be the exact opposite. So first, the price must be trading under the moving averages. Condition number 2, the market needs to pull back up into the upper moving average. For that, the candle must be touching the moving average with its wick, but it shouldn't break and close above the moving average. Now, condition number 3 is you need to ensure that the moving averages are pointing downwards like this. If they're flat or sideways like this, well, that setup is going to be invalidated. Then lastly, the price needs to break and close below the most recent lower low level without breaking and closing above the upper EMA. So like here, this is the most recent lower low level and this is our pullback. So we basically need that from this pullback area to the break and close. None of these candles should close above this EMA. Simple. Now, all our entry conditions are met on this candle, so we're going to enter a short position. We set our stop loss right at the most recent swing high, but if the swing high is too far up, well, we're going to limit our stop loss to 0.3. That number is again going to be indicated here. The take profit is going to be 1.5 times the risk. If we let this trade run, you can see that it was a profitable trade. In summary, this simple EMA strategy combines clear entry and exit conditions with the higher high, lower low strategy for both long and short positions. It emphasizes the importance of moving averages and market momentum. Now, remember to always manage your risk wisely and adapt your approach to align with current market conditions. Well, that's basically everything for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.